end game. It's the shitcoin of shitcoin. I mean, imagine telling your coworker you're quitting because Harry Potter Obama Sonic 10 and you coin. Boom! Imagine the media reporting on Harry Potter Obama Sonic 10 and you. Ticker is Bitcoin, breaking 1 billion market cap. Now, unless you hate money, go ahead and visit
HPOSNI.com.
Hey, what is going on, everyone? Welcome back to the channel. Welcome to Dano Crypto. On this channel, we show you guys how to make simple, effective, and easy moves in the cryptocurrency ecosystems. So we had a lot happen recently. So some big things in the news. We had Trump announce these basically Trump accounts for newborns born I think from January of this year, starting in 2025, so they were born this year, they will get, I think it's like starting with $1,000 or $2,000 into an investment account that will be diversified into stocks, indexes, maybe some gold, and I bet they're going to have crypto exposure. So I think ultimately here, where we see also one of the things that broke in the news is Vanguard flipping the script on offering for their $11 trillion in assets that they manage for an opportunity to get exposure into crypto as well. Then we have Paul Atkins, the now SEC chair, is getting us prepared for the Bitcoin market structure bill, the Genius Act, the Clarity Act. Everything is kind of coming into play here for us to give a good bias towards a super cycle. So the 4-year cycle has now been, I think, invalidated in terms of where Bitcoin is going to quote top. And I think that it's kind of showing here. And so we've had a lot of black swan events that have proven to make the downturn feel like we are or going into a bear market. So that's what's happening right now, my friends. But the markets are ripping. The markets are ripping. I think we said that the markets would probably rally into a rate cut. So the rate cut has a 91% chance that we're going to get a 25% or 25 basis point cut, which is basically a 0.25 cut of the percent of the federal funding rate, which dictates a lot of the forward motion of the money in capital markets and banks, what they're going to, charge for interest, what they're going to plan for how businesses are going to plan for the year. If when the Fed is tightened and hawkish, people get super bearish and, things don't look too great. But when the Fed starts to ease up, it all times perfectly where people get so bearish, people are exiting out of the market that are bears, and they're holding up on cash. But if they're holding cash for too long, the market's just going to kind of, leave them in the dust. But I think, though, the tried and true way here is to steady accumulate what you understand. I think that's the best thing, is because it's going to be different for everyone. It's I think ultimately we've been understanding more that Bitcoin is a good store of value, but also has risk built into it, which is great. We want the volatility. We don't want it to be stable. We want it to be a disruptor. We want to, like in the old days, like we have this post from, let's go to our account real quick. We screenshotted this off of the provex.com website. And this is kind of how I feel about crypto in general right now. If you are in crypto right now and you can do what Bitcoin did or hold long enough, where Bitcoin went from pennies to over $100,000 per coin, Ethereum went from 30 cents an Ethereum to over $4,000, getting close to 5,000. Those who hesitated never forgave themselves. So this is kind of like what we have to This is how I feel about investing in crypto: is the early believers built generational wealth. Spectators tell stories about the what if. So we want to be the people that are, have the balls to be the early believers in some of these networks. And I think one of those still is Bitcoin, because think about how many people are on the planet. Think about how many Bitcoins there are, and think about how much shitty fiat currencies there are. And so that's what you have to think about, is like, where would this fiat currency go? I think eventually it's going to go into this brand new money system. But welcome, my friends. Let's do a little chat check-in. Hope you're doing well. I feel for some reason, well, you know what? I'm not going to say it, but we're just going to keep continuing to press on. And hopefully people will get a little more interested in crypto. And we have some clips to play. We have Richard Hart yesterday also. This is in some of the breaking news. He released a new video, 47-minute video. We'll play just the first 5 minutes of it, because I think even just the first 5 minutes is a good clip to play. But he explains about the new protocol, about the new project, kind of about Bitcoin in the early days. And so we are going to play a little clip of that. And people overall feel like, he had a good tone and he's bullish. And someone who's releasing videos like this doesn't seem like someone who's scared or is, on the run, a lot of people think. So we'll, it's up to you to decide. Also, we wanted to play a clip about the Polymarket CEOs on 60 Minutes. And this has been such a really interesting technology, and also for just prediction markets in general, where the CIA and the FBI are basically using this. People in power and politics are using this to determine, actual generating factors of what is going to happen in the future. So Polymarket is almost kind of like a crystal ball to be able to get a few months of, before you think, you're gonna, before things hit the news and quote, normal people are, I just found out about this, or you might find out about it maybe a day before or whatever. Polymarket will have it a few weeks already determining a particular event that is, quote, catching the wind. And the CEO talks about, and he gets asked the question, what dictates a yes or no question on here, and what dictates a particular narrative that is going to be traded? And so that's a very good question to ask. So could be what the quote matrix in the system wants us to focus on and bet on and vote on. So I don't know. I just kind of love this. It's the more and more that our reality starts to evolve and get closer and closer to quote the singularity of robotics, AI, and complete autonomous control. The cracks are starting to be revealed through things like this. This is the red pill, blue pill kind of stuff. And it's like, whoa. I don't know if you guys are feeling, I don't know if you're seeing it, but if you are, hit that like button. I really appreciate it. Dive into crypto. So yeah, we're going to play a few of these clips. I'm just kind of setting you up for them. Then we are going to play a clip of Michael Saylor weighing in on whether Bitcoin's 4-year cycle is dead, like what we've been talking about. And he kind of goes into the same thought process of okay, well, Bitcoin's having cycles definitely generated the tokenomics and the scarcity in the network and the coin, because every 4 years the rewards that the miners, the computer miners receive gets cut in half. So every 4 years that's going to happen until the reward is next to nothing, but then there's not going to be any Bitcoin to mine anyway. It's just going to be miners solving the transaction blocks for transactions, not to mine the Bitcoin, but then to quote get the transaction fees. So that's how the network just continues to be powered, and this is how money will actually be generated through the energy of what the miners are doing. That's the kind of whole thing about it. And then you go into the whole aspect of what it will be powering with these miner, and look at what the Trump family is doing, setting up American Bitcoin miner facilities to start to get the transactions. Because what if they know? What if Michael Saylor knows? Everyone thinks Michael Saylor's getting liquidated. What if they know that it's going to be the money system, and they are going, and America is going to try and be the dominant mining transaction force for it, and profit, and basically pay off the $37 trillion debt and become debt free, because going on a Bitcoin standard system through Bitcoin American mining facilities. And freaking Saylor has so much Bitcoin. What if he knows this? What if he's gotten the fly on the wall type of opportunity, and everyone thinks, Michael Saylor's strategy stock is going to go to zero. He's going to get liquidated, but no one's prepared for it going to over $1,000 when Bitcoin is at $250,000. No one's prepared for that. So that's what I'm getting prepared for. And then we have Paul Atkins on Squawk Box talking about the regulations. We're going to play a little clip of that. And then we also have a mention about Choke Point 2.0 and how it made it really difficult. And this person also in this video mentioned about how back even in the Obama administration that they even made it harder for crypto innovation to exist. And also just it very much so our country would be a lot richer right now, in a better place, if we were the forefronting country in technology and in crypto, and not debanking people and making it to where it was just like almost impossible to operate in the United States. Because essentially then that would make us rich, but then all the back end deals that were happening in the Obama administration, the Biden administration, were not to make us rich. Like it just, we got siphoned, and all the other guys got rich. These guys. So we're going to play this. We're going to play that clip as well. Make sure you guys are hitting that like button. I really do appreciate it. We have 0 likes, so we probably have to do something about that. That would be cool. That would be appreciated. Don't know what's going on with that. Let's go through the bookmarks here real quick. So we'll play this. This is what's interesting about the Trump accounts, is that, the time in the market and when these particular children are 18, it shows the potential growth of how much would be in these particular accounts. And you think about the whole snowball effect of this and why they would want to, quote, invest in these kids' futures. Think about it. They benefit from these accounts just compounding. It's money, it's liquidity in the markets that will stay in the markets over time. And with that compounding growth, it's kind of like a win-win for everyone. And so actually the Dell family, so Michael Dell, so Dell, Technologies, Dell Computers, so they invested billions of dollars in this to this account to add money to be able to fund this account. They're not going to be the last ones. And so this is what is going to be interesting. And you think about this with your own investments and then also tie in the crypto aspect. So if you're getting that kind of compounded interest, which has like a little bit of risk, it's got obviously not as much risk as crypto. And it's going to be a little bit more steady, a little like not as risk adverse, I would say. But then when you add in the crypto aspect and you maybe do a 50-50 split, you're getting like a really decent aggressive risk profile with crypto exposure, and also with doing this with a steady investment account where it's split into some index funds. Just a nice, even going into, gold, silver, and think about that over a period of 5 to 10 years. I would be very amazed at how much it could compound. A lot. Gosh, I look at my wife's 401k and when she started going into it and where they aggressively actually allocated into it, And a lot of it was into tech and indexes, and a lot just in the straight stocks. and that was like 60% of her 401k, and it drew a lot of the value up over time. It's pretty amazing. So over 4 or 5 years is pretty astonishing how much it actually generated. Time in the market. Let's watch this clip.
Of where this goes from 0 to 2.25 million over the course of 60 years. That's a pretty nice nest egg for retirement if people continue to put into it. Your thoughts on this account?
Well, you know, on Fox Business, we talk all the time about the importance of time in the market. Start saving early. Teach kids why investing is so important.
See, we should be taught about investing early on, be taught about the money, but a lot of the times we don't get taught about that, because I think if we want to be honest, the system is set up to have the majority of people go into the money system to become the pawn, to become the debt slaver, open up a credit card, or get a mortgage, get the car loan, you know, just operate on this type of debt mentality. And it's not good. It's not good. So, and then to top it off, in our this generation, and the wave of sports betting added onto it, and then no one is thinking about compounding interest in an investment account. They're just thinking about the next parlay. Like, man, so like we definitely have to have kind of a come to Jesus moment in our culture right now with a big group of people. Because then you think about the people that are buying scratch off tickets, they're buying lotto tickets. If you could switch the mentality and say like, hey, if you just put that same money that you spend every week into a DCA crypto portfolio and also into an investment account that you set up yourself, it doesn't have to be from your quote job. If your job doesn't offer a 401k or whatever, you don't have one that has a retirement plan, set one up yourself, you know? Set one up yourself. You know, for some people, their retirement plan is DCAing into Bitcoin. You know, that's the retirement plan. So, but very interesting. So yeah, you start with the Trump Zone seed money, $1,000 plus $250 from Michael Dell just for opening it up. The government can't touch it. Kids learn to save from day one. And here's the crazy part: you don't even need to hit the 5K yearly max to see life-changing growth. So it's pretty crazy. And Michael Saylor is just reminding us to get back to work, you know, like everyone was like packing it up. They're like, it's over, guys, pack it up, bear market. He's like, get back to work. But people always now people are trying to inverse. It's like they're like, look, Michael Saylor saying get back to work, like go back to McDonald's, like we're you know, just you should stop. But I get what he means, though. I get what he means. All right, well, real quick, let's look at what's happening with Bitcoin. We actually had a pretty nice bullish case scenario play out instead of the bearish one. We had a bearish case scenario that we could have hit that liquidity down there again, but Bitcoin decided to choose violence and give us a higher low, and that shot us up to the order block here, which was a nice resistance point. You can see it played out perfectly. Nice order block resistance here, and now we could be doing what is looking like a Wyckoff accumulation pattern on Bitcoin, which is looking pretty sweet. You can see that because we made a higher low, we actually are looking very bullish and giving a through line resistance in a really good spot to where the next point where I don't see much of a gap here of resistance besides up here, we're going to be shooting up to. And so this is kind of what I was thinking, but I just kind of was thinking if that was on the lower bearish case scenario, this would be what would happen. We'd kind of have some kind of pattern like this. We get the Christmas rally. We rally into the rate cut. You know, we have the rate cut coming on the 10th. So I think on the 10th, we rally up past 100K. We rally into the rate cut. Because last time it's the same thing that happened, guys. The same thing happened where the market rallied into the event of the FOMC meeting. And then afterwards, we knew the rates was going to be cut. It was a 90% chance. It was sure deal. But what made it bearish was Jerome Powell's comments afterwards, where he was like, I don't know if we're going to cut in December or not. Who says we're even going to get a cut? And then everyone was like, bleh. And then the market took a plunge after that. It got bearish. So that could potentially happen again, where we get that rally into the rate cut. We still got, we still have 7 days until we get into that area. I think, if we go into the CME group here, you can look, and we are 7 days away. 89% chance, 90%. So this is very much in line with the poly market. So and then I think to myself, what price will Bitcoin hit in 2025? By the end of 2025, we have 100K right here, 48% chance of going up to 100K. We have 110 at 17% chance. This started to make a big move, but I would love, because my call for the end of the year, or it might happen in January, but it would be so awesome if it happened by the end of the year, to get 100 brand new all-time high, breaking new all-time high of $135,000 Bitcoin, and I would put some money on that on Poly Market. But yeah, that's what I think right there. Because look, 134,000, that's a perfect rally. It matches up pretty good with also the trend. If you see the trend up right here, it matches up really well. Basically a channel that has happened. Had that really nice consolidation to the low, showing strength, unless we get fully cooked and bonked and they want to bring it down into, because the last support, I think, like the line in the freaking sand, guys, is right here, 74,000. So if you're trading, you're thinking, look, if that could be the last, you'd probably set a limit order at 75,000 or any of these points right here. But like I said, any of those opportunities do not last very long. You can see that on the daily, look on the daily, when we go down this low, it doesn't last very long. It wicks. You can see where it wicks. It goes boom, and then it's off to the races. It doesn't last that long. It only lasts for like a couple of hours, maybe then a day, and then it just goes. So that's what I'm predicting for the Bitcoin price action for the rest of the month, all kind of correlated with the major events that are surrounded with the rate cut. And yeah. What else do we have? We have the Fusaka upgrade for Ethereum activated, layer 2 throughput spike. So that's also a big thing that's happening, is the Ethereum upgrade. And that is going to overall push, look, the ETH BTC ratio is flipping bullish. We're flipping bullish. And I think we're going to start to get into some really good ranges of the Fibonacci. We're going to start getting up in here. Once the ETH BTC ratio pumps over into the 786, oh my gosh, guys, like these alts are going to be flying. Like your Pepes, your ticker Bitcoins, your Shiba Inu, like all your like meme coins that are on ETH are going to fly. But then like your Aave and all the protocols, the lending protocols, then the layer 1s and the layer 2s, the Arbitrum, Optimism, these things are going to see some action. We're going to see some action. Right now, look, SHIB up 9%. SHIB isn't going anywhere, my friends. Like people think that, like, oh, it's an old. Look at what happened with Dogecoin. There's a setup happening with some of these legacy memes that you're not prepared for. I don't think anyone's prepared for it. But the people that are strong holders, believers, and are DCA in this stuff and only just have a couple $100 of these meme coins are going to see their portfolios look absolutely insane. That's the truth. And so just be prepared for it and know that you'll have an opportunity to probably scoop out some profits on the way up as well. That all just depends on your strategy, but just think about it as like it's liquid money. So it's however you want to operate. That's what's called decentralized finance. However you want to operate inside the ecosystem is up to you. So we mentioned about the ETF supercycle. We tied it with the all of the things that are happening with the regulatory clarity. It makes sense that they're going to want to allocate a lot of this money that's been pumped and has been pumping like crazy in the stock market through these accounts, and then allocate it into the next thing that's going to pump, which is the altcoins for the ETFs, like Ethereum, like Solana, like XRP, Litecoin, AVAX, HBAR, Algo, all the different ETFs that are happening, tons of them. And that is going to be a big liquidity driver for what I think is going to be the ETF super cycle for crypto. We can buy the direct assets. We know how to do this. We know how to do DeFi, but there's thousands of people that are not going to do that. They don't want to. They want to get exposure through the ETF. That's how I think a lot of this liquidity is going to get driven into things like Dogecoin. Like retail they were buying Dogecoin just on Robinhood and buying it on certain platforms. Maybe they were buying it on exchanges, maybe on Coinbase. But there's so many places that you can buy Dogecoin, but then at the same time, there are Dogecoin ETFs that are being set up. Imagine that. And we've mentioned about the Doge BTC ratio looking insane. If any of the BTC ratios you want to pay attention to is the freaking Doge BTC ratio, because holy crap, it is in this setup where it could pull a 2,000% move to the upside with the ratio from BTC. So it did this before on the bottom when it hit this trend line. And so that was a 6,400% move from the ratio of the bottom. And you look where we literally bounced off of support. We're about to pull another 1,000% move to the upside. So if you're accumulating Doge right now on the principle of whenever we've had a bull run in altcoin season, this is flipped bullish and have gone major gains. And you can say the same thing with ETH and BTC, same thing, flips bullish, and we're buying here at the lows. Woo! Oh my gosh. And I think even this one's starting to flip bullish. It was looking really terrible. Like the ones that are looking terrible were like XRP was looking bad, AVAX was looking bad, Litecoin and BTC was terrible, but they are starting to, I think, find a bottom in this descending wedge where it's got to break out at some point. So same thing with Chainlink. It's like, it was finding a bottom in all of these, a descending wedge. Same thing, ADA, descending wedge, but it's finding support because every time, history doesn't repeat exactly, but it does rhyme. You can see where even with the A to BTC ratio, we have seen two different altcoin seasons. And same thing with XRP, actually a few different altcoin seasons, because remember, XRP is really old. It was like, look, 2014 had a pop. 15 right there had another fake out pop, double top right here, went down into the bottom again. And this is with the Bitcoin ratio. Then you see another one happen in the altcoin season where there was more ETH and there was more altcoins in the space. And you can see another little pop here where it was, look, same setup, double top, boom, boom. And then look, it has not gotten to that point again. It's gotten close up to the middle range, the mid range, like the median of the ratio. But this is what we would hope for. Is for that to look, it bottomed out here, flip bullish, and then we're kind of just going sideways. So at a point where you start to see these things recover, and go, then you'd hope that you would have already been accumulating these exact alts right here: Doge, Litecoin, AVAX, Link, ADA, XRP, Sol, ETH, and be holding these right now, buying the blood, because they still don't look as great. Like, and then as Bitcoin is taking off, you're gonna see the ratio flip. And you'll see it through the dominance too. Like, the Bitcoin dominance is going to be very important. We watch that dominance hit certain levels and then starts to flip, and then we start to see ETH dominance cook. We're gonna be looking good, my friends. All right, so let's play just a couple of these clips and we're gonna end the live stream. Really do appreciate you guys coming in today, and make sure you hit the like button on the way in and on the way out. If you're just popping in, you want to catch, you know, a little bit of the news, a little bit of TA, a little bit of price action. And okay, so first we'll play Richard Hart's clip of him talking about the new ProveX. We're just going to play the first 5 minutes, so let's check it out.
Hello, everybody. Richard Hart here. I hope you've noticed at provex.com, there's a Coney project. It uses zero-knowledge proofs. It does stuff blockchains can't do. It does stuff off-chain and then puts it on-chain with a token, burns a token, and all this other cool stuff. It's being given away for free to those that have sacrificed. What are they sacrificing for? Go check it out. I think that's like $8.5 million worth of sacrifices so far. Provex.info. So provex.info is where people are making a political statement by throwing their money away. 8.5 mil so far. And then provex.com is the free token that's being given away to people that are in the sacrifice set. So what to do? You can go check it out. You can see what other people are using the software for now. So if you look at Bitcoin, Bitcoin was a conglomeration of a bunch of free and open source software. They used a free and open source front end called Qt that only ran on Windows. It was programmed in C++. And then they used open source databases. Everything's open source, right? So we stand on the back of giants. The breakthrough with Bitcoin was handing out tokens to on-ramp people for free. So there was a time when the Bitcoin existed and didn't have a price, but people still participated in the network because they had a belief. They believed in, you know, I don't want to say self-custody because it's inaccurate, but holding your own knowledge, your own private keys, which these days are generated by seed words. Back when Bitcoin was invented, there weren't seed words. The generating of keys deterministically from seed words wasn't adopted yet as a BIP, Bitcoin Improvement Proposal. So long story short, the breakthrough with cryptocurrency and Bitcoin was that you could prove people aren't double spending their coins by having a proof of work, which proves that the coins haven't already been spent, and then you wait so many confirmations until the economic energy of all of the blocks that are stacked up top of the one that you care about is enough for you to believe that it's not going to be rolled back. And right now, with Bitcoin over $1 trillion, it's a lot of economic energy every 10 minutes. It's pretty funny to wait 10 minutes for a block, to tell you the truth. In Pulse Chain, for instance, we have blocks every 10 seconds. It's a lot faster. Is it 10? Pretty sure it's 10. It depends on how quick people find. It could float a little higher, a little lower, like half a second or so. So,
and just for context, for people that are coming in, this is the most recent Richard Hart upload talking about the new project on Pulse Chain.
The breakthrough in blockchain.
If you don't know what Pulse Chain is, it is a layer 1 that is like Ethereum. There you go.
It's particularly Bitcoin, was that you have proof of work, doing timestamping, proving that people aren't double spending their coins, and you on-ramp new users because they can mine their own coins for free, at least in the beginning, or they could mine coins out of thin air by enriching electric companies and mining companies, proof of waste, you could call it, later on. And it worked. You know, you've got multiple $1 trillion of valuation. It worked. Now, what are some new crypto primitives that exist that didn't exist then? Well, zero knowledge proofs. So for instance, you know, one of the biggest problems with crypto is if you want to de-risk or risk off or whatever, or get into something that's guaranteed to go to zero over time, but does it slowly, the dollar, you need to go through a centralized exchange because there isn't any counterparty risk-free, decentralized on-chain exchanges for Bitcoin that have any volume or have any adoption.
So let's talk about this for a little bit, guys. Let's talk about this because the way that I have operated in crypto is I'm an idiot. I've round tripped stuff. I have just done it all. Okay. But the thing that I've probably done the least, I have taken out into cash. But what I've actually done is I've used crypto cards, debit cards, and try and spend crypto as much as I can with the stable coin. Because when you off ramp to your bank account, that's when it, I think, is triggered into a quote tax thing. And then it turns into something completely different. Because then now it's gone into quote income and it turns into a different type of thing. So, but when you are, say, you have Pepe, for instance, on something, you know, you have Pepe on your MetaMask or whatever, and you want to just literally swap it, or even some of these debit cards you can just send the Pepe into the debit card and just spend it like that. Some of these are using different cards and then it does the conversion when you spend it, depending on what card you're using. And so I think about it, the whole thing, I talked about it this morning. If you caught my video on X, maybe you probably didn't even see it. You literally probably didn't see it because I'm getting shadow banned. 4 people saw it and I uploaded it like 5 hours ago. So you probably didn't see it. Whatever. But I talked about how the old financial system is the blue pill. You know, you want to be plugged in, you still want to use cash, you want to be on the rails of the old system. But if you take the red pill, you are using all of the new different services. You're using crypto, you're using crypto cards, you're staking, you're earning yield. You maybe even have enough crypto to start lending it out to people to start earning your own yield. Like because that's what a bank does. So that's the whole thing about decentralized finance. As you get to the point where you start operating like your own bank, then that's what really crypto is all about. It's not necessarily about making money and number go up, which is obviously a great feature of it. That's obviously why we are in crypto. We like the risk, we like the volatility, and quote, what he's talking about is when you want to, quote, go into something stable like fiat cash. You know, it used to be a little bit more stable, but now it's not. It's actually deflating faster than ever because of the injection of the printed dollars that they've put into the system over the past 10 years. It's been 60-70% of the money supply has been printed over the past 5 years to go into the system. So it's inflating the crap out of everything. So your dollar, if you end up working for a year, after all that year, if you made $60,000, your purchasing power actually went down by 10% or 15%. So you just lost like $10,000-$15,000 by the dollar deflating. And so when you operate in the crypto space and you're holding certain tokens like Bitcoin, then Bitcoin over year has been able to go up 60% on the year over year on average, or gold. And you could do the same thing with gold or silver. Silver's been a little different, but it's catching up. But combine those all together, then you just destroyed the 10%. You are now making an average 60% flat, now operating inside of the crypto space. So who cares if it's a tax generated event even happens, because at that point you just beat inflation, you just beat tax, and you're using crypto because you're not off ramping into fiat cash. Let's continue.
The devs actively don't want people building things on top of Bitcoin. They reduce the amount of data that you can put into the chain, and that works well for other chains like Pulse Chain because it makes it easier for people to launch tokens on it with like pump.tires, or, you know, use the tokens that are already there. It's a full system state fork of Ethereum. So if you had any coins on Ethereum or Ethereum itself around 2 years ago, you got free coins in Pulse Chain. So what am I? This is a really long story. This is how it goes when you're speaking from the heart with no script. So long story short, what was the breakthrough with Bitcoin? Giving out tokens for free to on-ramp users, solving the...
And imagine getting free Bitcoins back in the day and still like having those. Like you got free Bitcoins for testing out the network and you had like 1,000 free Bitcoins. And then even when you started to get a little bit more interested and you started to buy some, like I think about when I knew about Bitcoin, it was Andreas Antonopoulos went on Joe Rogan's podcast and he was talking about it. And it was like 2012 or 2013 or something like that. And I was like, Satoshis, he was talking about Satoshis and sats and Bitcoin. And I was like, okay. And then I just kind of completely ignored it after that. And I bet at that point, like what was the price of Bitcoin in 2013, 2012, 2013? It was like, let's go to the charts. We'll go to the Coinbase chart, or the Bitstamp chart actually is the best chart to look at historical price. So you go back to 2013 and it's crazy that I have to go down this low and it makes you want to scream if you're thinking about it. It's too, because if this was the price that we could have been buying Bitcoin was at $48 per Bitcoin, what the hell were we doing playing Counter-Strike and World of Warcraft? And what the hell were we doing playing Skyrim? What were we doing in 2013? I think we were playing Skyrim. Wasting time. You were probably playing Skyrim too. Killing dragons instead of adding zeros to your bank account. You were killing dragons, going boom, and doing the Dragonborn calls instead of thooming your freaking bank account. Gosh, you could have even been mining back then too, because the mining game was not as competitive. Like you could have been mining Bitcoin. You could have been mining your own Bitcoin. Oh my gosh, it's ridiculous. Look at that. Look at that. That's probably the moment too. That was probably the moment I saw that and completely ignored it right here. And now when you go in and you look at just like, we're going to do it. We're going to do it. Get ready. Let's see how many percents that is to the top of where we're at right now. It's diabolical. So $45 and you go all the way. Let's just even go to the 2021 top. 136,000% network growth rate here. Oh, it makes you just wanna, makes you just wanna. I don't know if you've ever seen the Saturday Night Live where Fred Astaire is acting like Prince and he's like, I just wanna. They're like, sir, what? I just wanna. I just want to cry. Oh, but I've always said we all get the Bitcoin price we deserve. You know, that's the thing. You know, you get convinced so many times that you thought you knew what was going on. You know, you didn't think you needed to worry about Bitcoin so much. You know, the government's going to ban it. Oh, they're going to do this, they're going to do that, and blah 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 blah. I think it really will eventually be the money. You know, it's just like there's a lot of stake in the game of the old financial system. So we're going to see the die off, and we're seeing it happen right now. Look, JP Morgan, Jamie Dimon, all those knuckleheads in the banking system, they're just on TV sometimes saying the stuff that they're saying because like they have to like play the part. But then you see what they do, you watch what they do, don't listen what they say, watch what they do. They are getting ready for the biggest transformation setup of the financial system we've ever seen. It's going to be crazy. All right, let's continue to play this clip. We went off a little tangent, but you know, it's for good measure.
The Byzantine generals' problem with double spending, so people could prove that their coins aren't being double spent. And now, what is this technology, the zero knowledge technology that ProveX is built on? What can it do that Bitcoin can't? Well, it can solve that counterparty risk problem. It allows you to prove things that blockchains can't prove. So many years ago, I won't say many, but a few years ago, people developed technology which allowed you to issue cryptographically secure proofs from secure certificates that you see every day with email or you see every day with websites. So when you go to when you receive an email or when you go to a website, that little lock, that little SSL lock, you can do things with it that people aren't aware of. And that's really the breakthrough here. You can issue statements of proof from those certificates regarding what is in the statement. So if you go to a web page and it has an SSL certificate on it, you can prove that that server said that thing. And if you put it on the blockchain at that time, or at least no later than that time, and so you could solve a lot of other trust. So blockchains solve double spending trust and time stamping trust and when things happen trust, but they can't solve for you without this other technology that runs alongside them and makes them more powerful and can do things they can't do. So if someone, let's say you wanted to trade crypto without a disgusting middleman in the middle, say an exchange, the guys that get hacked, de-anonymize you, ruin your privacy, ruin
Take
your
your
security,
money,
lose your coins, ask you a bunch of weird questions. It's the least enjoyable part of cryptocurrency. It doesn't need to be that way. You can trade directly with someone else. So the problem with trading with someone else is you have this issue of trust where, well, they say they sent the money. Did they send the money? They said this. They said they sent the. How can you prove they sent the money before you send your coins? Well, ProveX. ProveX allows them to sign a statement from an extension in their browser. You can do it other ways too, but this one's one way you can do it. That proves that.
And the other way that he's talking about is through your command prompt. So when you can run the software directly through your command prompt, so it links to the server through your command prompt, so you don't actually have to like connect it through the browser. You can do it through the command prompt. So I've actually used PulseX like that through the command prompt, and it just runs it as software.
They sent the money, and so if two people perform a trade, and it's not just restricted to cryptocurrency exchanging, or is that even the right word? Basically, anytime someone wants to prove that they did something, as long as you trust the server that's issuing the proof. So let's say if someone said they PayPal'd you something, you could pull proof from the email they got from PayPal's email server or from PayPal's website itself. You could issue a cryptographically secure proof from either of those two things that showed that indeed this was paid. And because of the zero knowledge property, you don't have to declare any extra information. You don't have to show a screenshot, which could be faked, by the way, which is what's so interesting about this. So blockchain solve double spending, ProveX zero knowledge tech, and I prefer to brand it just ProveX because I'm not here to advertise zero knowledge tech. Just like Satoshi didn't advertise the database he was building on, and Satoshi didn't advertise the Qt GUI, graphical user interface software he used. He didn't advertise the cryptographic primitives that preceded his work. He wasn't out there advertising SEC P256K1 as a curve, right? He made a brand and he promoted the brand, and the underlying tech that was underneath it, he didn't spend any time promoting that. And ProveX, I think, is kind of the same thing. The open software works. The open source software works. It's in production. People are using it today. You could go try it yourself, a version of it that doesn't have.
It'd be crazy I mean, imagine if Richard Hart was actually Satoshi, because you think when he was mining it back a while ago, But I don't know. That's crazy. I don't know. That's a very, very crazy claim.
Of a token. Doesn't have any token burning, and doesn't really have any users, barely.
Some people think Steve Jobs is Satoshi.
Or ZK.
But yeah, so we figured it out. You know, we actually guessed it right. You know, I wish Richard Hart would have sent us that 5K for getting it right for the first. I think out of a lot of the people that were trying to guess what ProveX was, I was like, well, it's going to be some kind of privacy protocol. We're going to be able to use all those same coins, all the chains that are active inside of the network. So, like for instance, like all of these World Chain EVM, all these different EVM. Chains like Bear Chain, Hyperliquid, Abstract, Monad, then we got Dash for the BIP32, all the different BIP32 networks that are like Litecoin, Zcash, Dogecoin. Because remember, Dogecoin is a fork from Litecoin, so it is operating on the same type of consensus for transactions. And then you got Sonic, you have Tron's EVM, then you have Cardano, Avalanche EVM. Optimism, the layer 2s, Bitcoin Cash, look, Ripple, but it's remember you got to sign a memo with that one. Monero, look at all these networks. So it's like that was always the hint. I was like, oh yeah, it's just gonna be like all of these are gonna be the compatible networks that you can basically shield with these. Shield into ProveX, get the coin, and then have ProveX as the burning mechanism, and then yeah, it's going to be cool to see what happens. I sacrificed a little bit of money. I only sacrificed like $20. I mean, we didn't sacrifice much, but we took part into it. I think we're going to sacrifice a little bit more just to kind of see if we can get a little bit more exposure. But we are very interested in this particular narrative right now in crypto, because it's like you got so many things that you could pay attention to. But I think the best thing what are we all trying to do here? Find the best asymmetric upside potential that'll have the most X's and have the most crazy surprises and the best chances to be able to take profits and get out with enough liquidity. I mean, that's literally that is the mission here in crypto. Stay in long enough to where you can make life-changing gains and continue to go into each cycle, learning, getting better, and be able to build something at a point where you have so much liquid crypto cash that you can do whatever the hell you want to do, build whatever you want in the metaverse of crypto and in real life, and then tie the shit all together back with the real world asset, because now you can't get freaking thrown in a cage for, minting a coin because everyone's pumped, can launch a coin in 2 seconds. President's launching a meme coin. So times have changed. Hit the like button if you're with me. All right, we're gonna play a couple more clips and then we will end the live stream. We appreciate you guys being here. Yep. Here, let's play this little clip of Michael Saylor talking about the 4-year cycle.
We're about to kick off 2026.
And after this clip, we're in it.
What is your outlook for Bitcoin in the new year?
Bullish. I think that the exciting developments in the asset class are bank acceptance and credit development in the banking network. So we've seen about half of the large banks in the United States start to extend credit against IBIT in the past 6 months. And a number of banks like Charles Schwab and Citi have announced they're going to start to custody Bitcoin and extend credit against it in the first half of 2026. So I think that the real story in 26 is banker acceptance of Bitcoin, willingness to custody it, trade it, and extend credit against it. And that should catapult the asset class to new levels.
And this week, Bitwise CEO Hunter Horsley argued that the 4-year crypto cycle is over. And Fundstrat's Tom Lee made the same argument, saying that the classic 4-year Bitcoin cycle is dead. What is your reaction to that? Do you agree?
Yeah, I think that the 4-year cycles are based on the Bitcoin halving. And the Bitcoin halving was really important for the first 12 years of the asset because we were cutting the amount of Bitcoin that was being cut from the supply was very material, relative to the demand in the market. But right now you're seeing days when Bitcoin trades 50 billion or $100 billion in a single day. The total amount of the halving and the next halving is going to be 225 Bitcoin. So 225 Bitcoin times even 100,000 coins, it's $20 million a day is the impact of the halving. And so $20 million isn't the first order impact on a $50 billion a day liquidity. It's not even a second order impact. It's probably a third order issue. The primary drivers of Bitcoin right now are the structural developments in the market. For example, if the banks extend $50 billion worth of credit, right, that dwarfs 20 million a day in the halving. And then when the SEC loosened the restrictions on derivatives trading on IBIT, the open interest in IBIT went from 10 billion to 50 billion in a few weeks. So you're talking about tens of billions of dollars of demand.
And then you have what we were talking about yesterday, the opening floodgates of all the liquidity that would be going into the ETFs through the retirement accounts. So the retirement accounts would equate over a 10-year period anywhere from, you know, a couple $1 trillion, but actually over 10 years, it was like 10 or 15 $trillion over a 10-year period would be allocated. That is going off of only just a 1 to 5% allocation, not like an aggressive. So imagine like you get some accounts that are very aggressive, you get some that are doing 1, 2, 3%. But if all of them just did a modest 1 to 3% allocation, it would add into the total cryptocurrency market cap valuation. And then think about the stable coins, think about all of what we're talking about. And then the banks opening up the capital credit markets to then, to get exposure into the cryptocurrency markets. It's going to be crazy. It's just like so much liquidity is coming in and like people are so bearish, you know?
And for the asset based upon the embrace of the traditional finance establishment. And so the asset class is being driven by the structure of support in the banking industry and in finance, and a few regulatory changes that are actually enhancing that support for the asset.
Now I want to turn to digital asset treasury companies because many people I interview call you the OG. Back in 2020, Strategy made its first Bitcoin purchase, more than 21,000 Bitcoin for a total of about 200.
Yeah, we know that story. But yeah, I just wanted to play that little clip, just a nice little clip. I think that was it. I think that's all we wanted to play. Just make sure we have everything that we wanted to cover. I think that was pretty much it. So portfolio, or in the altcoins section, what is looking pretty good right now on the alts, we got SHIB, like we said, up 10%. We have Metis up 10% as well. Metis is a layer 2 for Ethereum, and honestly, kind of one of my favorites. Like I like Arbitrum and Metis as kind of as what I think more of a very much undervalued ecosystems for Ethereum. And there's some stuff happening on Metis, like some underground kind of, you know, culture stuff happening on Metis. So it might be good early adopter potential. Then we got ENA up 8%, got Link up 7%, AVAX 5%. Looking pretty good, like it's going to be popping back up into those fib levels. Then we have Pepe looking really good, up 5%. I think Pepe is really going to surprise people, break all-time highs, go into that fib, that next 2.61 fib. Then we have ETH looking really strong. ETH like just started to cook. I think we're going to get ETH coming back up to test into our $5,700 target level. Sui looking good, 3%, up 3%. I said Doge looking really good because of that ETH or the Doge BTC ratio looking great. That's up 4%. We got Polkadot up 3.6%. We have Litecoin up 3%. Still looking like in a really good buy zone here in this block. Arbitrum up 3%. Arbitrum kind of got cooked, to be honest, during that liquidation event. A lot of those altcoins got really cooked from Binance. Gala, I haven't heard anything about Gala. Don't know what's going on, but that's up 3%. Don't really know any, like, I mean, they're just kind of flatlined. Not really focused on them too much. Floki was like ready to freaking rip. Floki was getting some good PR, good news, and then it got cooked really bad on that liquidation event. So it's probably hard for that to recover. We had a speculation that it was going to be popping up like this, like it was ready. It was in a channel, and then look, I mean, the markets, like market makers, Binance, heavy hitters, cooked those projects, and so I'm sure they're not too happy with them right now. But that was the hope and dream of Floki. It was going up, and it did the complete opposite inverse of what we thought it was going to do, thanks to Binance. So Monero, I think our target for Monero is looking like it's coming clean. We're going to be seeing a $700 Monero probably going into quarter one. And then when Bitcoin breaks all-time high, or I don't know what's going to happen first. We either get Bitcoin breaking all-time high, or we get Monero breaking an all-time high, breaking it through 520. And then we get, and you can see this pattern here. It's kind of a swoop, and then another swoop, and then I think we're going to swoop into a possible $1,000 Monero. So pretty decent, not too bad for Monero. But just know that if we get $1,000 Monero, that's only a 2x. That's like a 2-3x. Trust me, guys. I think Litecoin is gonna rip. Like Litecoin, it probably has more of a chance to give you a couple more X's than Monero. I'm just gonna be honest with you. So Monero, you like Monero, privacy, cool. Who cares? But yeah, if you want to invest in, the silver over here of crypto, you're gonna get yourself possibly a 386% move to the upside. History does not repeat. I swear it doesn't repeat, but it does like to rhyme a little bit. We've had 2 different altcoin seasons represented by Litecoin. No one wants to admit it, but it happened. So why do you keep acting like it wouldn't happen again? Doesn't make any freaking sense. The sentiment was even worse back here and back then. Now, and it did this. We had all this stuff happening on all these during these times. Then we have all of the most bullish setup of ever in crypto for it to exist. In America specifically, and we're at the most bearish sentiment possible, and you guys don't think it can go here. So I'm going to be on the other side of that prediction, which I think Litecoin could destroy and trend in to about over $650 per Litecoin. Get ready for it. But yeah, that's what's happening across the markets right now with the specific alts I like to watch, and also Sol's cooking. Sol's getting ready to break a new all-time high. We just got to be prepared. We got to be ready. DCA. If you like Sol, then you would like the DEXs like Radium and Orca. Radium and Orca are definitely going to see some revenue generated with all that trading that's going to be happening on Solana. I think the Polygon ecosystem is looking pretty good as well. Pingu recently saw a nice little pump, nice little pop, 25% recently yesterday. And we could be seeing a pump up back to the fib level, which was the 618 at 4 cents, 4 or 5 cents. And from this point right here, I mean, that's a 3x, 4x right there from the bottom, going into from this support. So that's looking good. Where's our ticker Bitcoin? Yep, ticker Bitcoin yesterday had a really nice pump, 12%. And we are just looking at this as a Wyckoff accumulation happening right here. And we are probably going to be seeing a 13-cent ticker Bitcoin here when we start to rally, like we said, with the entire market. Ticker Bitcoin tends to pull with the rallies. And that is my altcoin sweep for you guys. And yeah, thanks for tuning in. Hope you guys have a good rest of the day. Peace.